On trading, I don't use nothing crazy. I don't try to use nothing crazy. All I use is supply and demand, fibs, and harmonics if I see a potential pattern, price action, and support and resistance, and that's about it. Alright, so to kick this thing off, I'm just going to first show you how I draw support and resistance, mainly. Okay? So first things first, I draw it from the wicks. The wicks is basically the highest price points that the market tries to reach. It would once again try to actually reach that point again. So first thing I do some markups, get all the wicks ready. All right, so wick, wick, wick. Actually, I'll put it right here. Previous one. Wick. And put one down here. Wick and wick. Alright, so that's just a few, matter of fact. There's like a lot more, but I mean, like, this is just basically the concept. Okay, so for instance, I would have took this right here mainly because it didn't close over this resistance. Actually, it didn't close over it. And normally when it doesn't close over it, actually, as far as create a brand new candle over it, like if it did this and then a new candle was formed over it, then it would have been some different and everything. But this will happen right here. The market, it came up, it closed like halfway over it, and this next candle shot down. Always, if it does this, trust me, you could take the sell. You could take the sell. Guarantee, I promise you. On this, if it breaks through on one full candle, and the next candle it spikes back down, it's still a downtrend. You know what I'm saying? It's not even like a downtrend, but you can still take that sell and still make profit from it. You know what I'm saying? And you seeing this right here and everything, the main thing you will always look for is a retest. Always look for a retest in any single thing that you're doing. Alright, so, and if it came down to, like, let's say this pattern right here, let me mark this off real quick. Let's go on a 5 minute. Try to zoom out, it's far back. Alright, it's up here. Okay, so what happened here is basically it was retested from its newfound resistance. So when the market came up, it came up again. It did the retested one more time, and then dropped. So basically, it tried to break through, but then again, it respected resistance. The wicks, remember, always wicks, always wicks, always wicks. Look at your wicks. Trust me, it's a big change. So if I seen this right here, if none of this even existed yet, all this didn't even exist yet, I would have marked off my wicks first, and then wait for a retest. The market always retests wicks, always retests wicks. You know what I'm saying? You don't have to actually keep the wicks that you draw on a 5 minute chart in your whole chart. You know what I'm saying? So like, the main chart that you draw it on is the hour chart, 4-hour chart, on and on and on. And once again, right here. Okay, so for instance, if I had seen this right here, what I wait for is a retest of the newfound resistance. Let's watch this though. It's gonna blow your mind. Okay, so the market came up, right? It broke through support, and what it did? It retests on this wick right here. See it? That wick right there. That's when I would have got into my order. That's all I wait for when I'm actually getting the entry. If that doesn't happen, I'm not taking it. And that's all I'm waiting for, is that retest of newfound resistance. That's it. All right. So to wrap up, this is going to be basically, that's how you draw support and resistance and actually benefit from it. Once again, wicks, wait for those retests. Came up, retested, shot up. A little bit of drawdown. It's not much at the end of the day. Yeah, but that would have been a definite buy right there actually, and that's all I look for. I don't look for nothing else. I don't try to make nothing complicated. That's all I look for. You know what I'm saying? Once again, like let's say if I got in like, I try to get in like right here. Remember my support point is right here, based off this wick right here. Let's smart this up. All I'm waiting for is that retest. No retest, no entry. Simple as that. Let's get this right here. Alright, so boom. It came up, tried to retest, it broke through. It respected the newfound resistance. After that, kept on retested and then dropped. So I'm saying, even though it was like bouncing off many times, I would have still took the sell. Simple as that. I would have had either, I would have probably had like a, what is it, a sell limit ready, like a sell limit. So like once it broke through, I would just put my sell limit like about, let's say like about, what could it say? Probably like about 1 pip away from the resistance, or a few micros away from the resistance. So once it touches it, it grabs it and call it a day. And you have to do this on an ECN account, guys. Why? Because if you set a buy limit, which is when the market is going down, for instance. Let's say the market is going down. Your buy limit is set like, let's say like right here. Damn it, change the color. Let's say your buy limit is right there, and your support point is right there, and you're expecting the market to retrace. The buy limit gets hit, and it gets hit very tight because the spread is so low. And whenever you're doing a buy limit, sell limit, pending stop, sell stop, they all have to cover the spread before it opens up. So this is why ECN account is good, because the spread is so low. So it executes like easily, and that can make your entries really on point. It's crazy. So once that gets executed, you might sense a little bit of drawdown, but not much, and then it takes off. That's a buy limit. The buy limit opens up. It let's say it hits the spread point, which is probably like a few micros. It opens up and activates, and then from there, if you're saying that the market is going to retrace at that point and it retraces, you're going to be in hella profit because your entry is going to be so on point. So it gets crazy. A sell limit, same thing, but in a different way. The market's up here, you're expecting it to retrace. Support is right there. It comes up. It touches it. Damn, what the fuck? It touches it, and you're expecting it to retrace, and it retraces like right around that area. So that'll be a sell limit up there, basically. And a sell stop is basically when the market's going down and you just want to hit this one point and then keep on going down. But a buy stop, same thing. The market's going up, you wanted to hit a certain point and pass it, it hits it, and it keeps on going. So limits are basically the opposite, because it's supposed to reverse on those points compared to damn, what the hell? Compared to the limits where it's supposed to reverse, stops are supposed to keep on going. So it's like a continuation type pending, when the limits are a reversal type pending. So take those in consideration. They are bomb if you know how to use them. Let me erase this real fast. I also don't want to erase my support points and resistance points. Alright, so next I'm going to show you guys how to do supply and demand, how I draw them actually. Alright, so basically I draw them very I wouldn't say different, but I'm pretty sure like this is how you actually draw them. Okay, so how I draw them is basically from, let's say there's a strong uptrend or a strong breakout. How I draw them is basically from the previous wick, which is right here, the previous wick, to the breakout candle's body, which is like right here. So this wick right here, all the way up to this point right here, and then drag it across. Alright, so previous wick, candle's body. Alright, so that's considered as a supply and demand zone. Why also? The market was indecisive all right here. Once again, it came back up, touched this newfound supply zone, and it's kept on going. If you drag it more across, same thing. It respected the supply zone. Let me give you a few more examples. Once again, previous wick to break out candle's body. Down. Had to be pinpoint. Trust me, everything is accuracy. Everything is accuracy. A little bit up, just say. All right, so this would have been a little bit more up. Okay. Alright, so basically this would have been your what is it? Your demand zone. So seeing that and seeing that there's support here based off this wick, that would have been a definite buy. Like that's like a double confirmation right there, and that's how I trade actually. I trade off based off confluence. Confluence is basically mixing type methods and everything for a double, triple confirmation. You know what I'm saying? So that's the best thing in trading to actually have, because it can really benefit you dramatically as far as not just one confirmation is good, two confirmations is good, and then three confirmations are good. You know what I'm saying? And then that's when you actually start pulling out your fibs, just in case. And fibs basically, like I told y'all inside this one video that I made not too long ago, the PRZs are, which is the price reversal zones, is, what is it? Yeah, 38.2, 61.8, and 78.6%. How you draw them? How you draw them is from your, what is it? Your relative low to your relative high. Okay? Always to your relative low to your relative high. So, for instance, since this is in a downtrend, I draw it from the relative high to the relative low. If it's in an uptrend, I draw it from the relative low to the relative high. You know what I'm saying? Vice versa. And as you can see, like right here and everything, the market came. Okay, so wow, it retraced at 61.8 right there, as you can see. And what you'll be waiting for here is an uptrend, if anything. So one point that it could possibly reverse at is 30.2. That's going to be the first target and everything inside this whole method all right here. And plus, what you have up here also, you have a mini supply zone based off, remember, the breakout candle, the previous candle, and the breakout candle. If you drew this across, that would have been a definite target and everything for a next level that the market might spike up to. Because this market right now is in an uptrend. That's why I took this buy when it actually hit this support level right here also. I took the buy mainly because it was an uptrend and it hit strong support. So what is that? Like a double confirmation. Double confirmation. That's the best things. And once you learn how to do fibs, what's next? Why not learn some harmonics? All right. So let me point out like a little pattern for you real quick. Euro USD. Haven't seen any. Okay, so for instance, like when it comes to like patterns, I see only certain patterns just off the head. Honestly, like for instance, like right here, I'll possibly see like a bullish back, mainly because it's the form of a double top formation, that breaks out once it hits the retracement level that hit like down here. Like this right here is probably an 88.6, and that's just off the head. I didn't do this before or anything like that. So previous low to previous high. Okay, so damn. So what happened right here exactly? And this right here is possibly a 78.6 retracement level. More than likely. Let's check it out. All right, perfect. 78.6 retracement level right here. And this would form a perfect bullish bat pattern. Because bullish bat patterns are, this is right here. It has to retrace at 50% on the first X and A leg. I'm going to show you guys how to draw this right here. Okay, so X and A leg would basically be right here. X till A, B, C is the 78.6 mark that I told you about earlier. 78.6 and down to 88.6. And what happened next? Bullish. Alright, so if I pull out my fibs, it'll mark it up perfectly. Check it out. Okay, so first the market came up, it dropped back down to what? 50%. And what does that do right here? It has to be from 38.6 to 50%. This time it retraced at 50%. From there, it went up to 78.6, which I showed you earlier. 78.6 can also be 88.6 in that range, either or. I see to actually form at 78.6 a lot more than 88.6, and that could still be considered as a legitimate bullish bat. Okay, so from there, C to D has to equal 88.6, which is X to A has to be 88.6. All right, that has to be a little off. 88.6, 88, 88.6. Okay. So from that point, that would have been a retrace for a bullish type pattern and everything on this market right here. Okay. So in all the mix, sorry, I do like a lot of stuff like when I'm trading. So in the mix, let's clear this off real quick. In the mix, I would be doing a little bit of trend lines to basically draw these points real quick for you. Okay, so alright, so the reason why I would have took this buy right here is a few things. Once again, a retest. Alright, two, it touched this trend line 3 times, which is basically gold. Let me show you guys. So it was a triple touch, and then it went bullish. That would have been, oh my god, so many pips. I'm going to show you right now how many pips it would have been if you did this on the triple touch of this trend line that didn't break, which was also known as support. That would have been 2,167 micros, which is 216 pips. That would have been crazy. Alright? And once again, if I zoom in on the 5-minute chart, let me go back. What I'm waiting for is that retest. No retest, no entry. And what happened here? Irrespective support, which is basically the trend line, which is a diagonal version of support. And more than likely, I could also find a support point from this also. Let's mark it up. Okay, so once again, now I always do this every single time I trade. Okay, once again, mark up, mark up, mark up. And wick. Always wicks. Always wicks. Okay, so for instance, perfect. Right here. What I'll be looking for is that retest. No retest, no entry. Alright, so what happened right here? It tested support, it came back down, tries to retest again, and then took off. It didn't break support. As you can see, a candle was not formed over support and kept on going. A candle was actually, it was midway. It didn't form over it. Every single time it formed, it was on support. Every single time, nothing more. You know what I'm saying? So that would have been a definite entry right there, like straight up. what I'm saying? So these are points to actually look out for inside the market. And yeah, like, you should get your bomb ass entries. So once again, always do a markup, 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 markup. What happened over here? Just based off this wick right here. It retested. What happened right here again? Once again, it retested. I would have took that. Actually, I think I did take that. Yeah, I did. I wrote us down actually. This was after NFP. Yeah, this is NFP, and after actually, I wrote us down to like somewhere like right here. I can't remember like where it actually exited, but a good exit point would have been based off the wicks once again. It's on our chart. Market came down. It touched it. It broke through. That next candle shot up. You know what I'm saying? After that, was confused and shot up. So I mean, that's all I do, honestly. Like, I don't use that many moving averages, as you can see. I don't need that much stuff. Keep it simple as possible. Study, 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 and trust me, you could be forever in profit in no time. And always do these type of analysis and everything on a bigger time frame. H4, H1, daily chart, either or, it's your choice. But trust me, you have some bomb ass entries and everything else. But yeah, this is Quillen Black. So in this video, I pretty much went over. Let me go on other chart. EuroCAD. I went over supply and demand. I went over fibs and harmonics. A little bit of price action and support and resistance, and that's about it, honestly. So let me know if you guys have any kind of questions. Remember, supply and demand, previous wick to the breakout candle's body. You know what I'm saying? Fibs basically are, look for your PRZ zones, which is 38.2, 61.8, 78.6, and 88.6. And price action, basically, always look for a retest. Always look for a retest on a 5-minute chart. Basically, go off your major patterns and everything on a bigger time frame, which is like our chart or 4-hour chart. From there, you zoom in. Always look for a retest on that 5-minute chart. And yeah, just trade off that. If the candle doesn't form over the new level of support or new level of resistance, it has not been broken. That's why the next candle after that, more than likely, is gonna go the same direction that it was going before, like a continuation type pattern. And yeah, I mean, like, that's about it.